The financial stocks, the banks, et cetera, are falling for the fifth straight session. And believe it or not, that is the longest losing streak since April. Kind of goes to the overall market. But look at the XLF. That is one of the biggest financial ETFs out there, down 3% in the last week. Let's get your next investment move with the Trading Nation team. Dennis Davitt, Harvest Volatility Management, Larry McDonald, the founder of the Bear Traps Report. Larry, I thought it was supposed to be this simple. Interest rates are going up. That means that net interest margins should go up, which means it's all good for the banks, and they're an easy, no-brainer bid. It doesn't appear that way in the last couple of sessions.
Well, it's become a very macro trade because the Fed, the December rate hike this summer was only at 18% probability for the hike in December. Now it's 90%. So the front end of the curve has been pushed up dramatically by the Fed promising to go in December. But the long end of the curve, 10-year bonds, 20-year bonds, 30-year bonds, is waiting. It's waiting for that growth from tax reform. And I think the growth's going to come, but the curve is flattened so much that it's crushing the banks. Bottom line is we've had 50, 60 basis points of curve flattening the last, say, month or so. So the probability of the curve steepening is very, very high over the next, say, 30 to 60 days, maybe a couple of 6 months. So that's good for the banks. So the bottom line is the banks are pricing in a flat curve, which has already happened. Going forward, they'll benefit from a steepening curve.
So you think they'll eventually, Larry, one more to you, eventually come back? I mean, I don't want to say come back. I mean, it's a 5-day losing streak. It's not the end of the world. But you think ultimately they will prosper?
Yeah, they're going to prosper because for two things. Growth is eventually, tax cuts are going to help the long end, number one. And number two, deregulation from Treasury is going to help the banks dramatically. So those two things will help the banks in the near term.
Dennis Davitt, Harvest Volatility Management. Are you a bank believer longer term as well? Because the market has bid a lot of these up already.
The market has bid a lot of these up already. It's been a year now, people were positioned the complete other way from the previous administration, thinking they were going to continue to see the regulation that was on the banks going forward. That obviously is not the case as much anymore. But I caution people, all my friends across the aisle in fixed income, be prepared for the possibility of a steep curve, but in an inverted fashion. The regulations around the long end of the curve, forcing banks to hold those bonds, the demand for longer dated bonds out of European banks is going to continue to hold the long end of the curve down, regardless of what the economy does, regardless of what the Fed does on the front end. And I don't hear too many people talking about how they're positioned for flattening curves. That's something that we all know. Larry pointed out that that's priced into the market, that, how the curve has been flattening. But I'll throw another fly in the champagne that's kind of come up in the last week. And that is, what are the holdings in the bank out of the Middle East? Middle Eastern sovereign wealth funds own enormous amounts of bank stocks. I mean, the biggest shareholder in Citigroup is out of Saudi Arabia.
And I wonder, it's a very interesting point, Dennis. I wonder if, and it's a little bit sideways, all this stuff going on in Saudi Arabia and concern about whether or not there's going to be war is causing big Middle Eastern investors to sell bank stocks. Or to sell what they can, which happens to be bank stocks. Not just banks, but anything they can to raise capital.
Right. If you have a huge chunk of your wealth tied up and you have a proclivity to being invested in these banks, and say some of those bank stocks are held at certain institutions that are frozen, you probably hold other bank stocks at other institutions. And if you're moving to you need to hire attorneys and you need to raise cash it's kind of a silly comparison, but that's something that usually comes out of left field when I look back on...
Dennis, that would imply, if you're right, and you might be, that would imply a short-term sell, though. That'd be a short-term phenomenon.
Right. So I'm concerned. I don't see it in the options market. I don't see people scrambling after puts, which, kind of precurses that. But I also haven't heard people talking about liquidation of bank holdings from Middle Eastern interests. So it's just something to keep in the back of your mind. As an old risk guy, I kind of worry about these things.
We like old risk guys. It's fine. Don't offend you. Everything's fine.
There's not a lot of old ones around.
Well, it's an interesting theory here, and we're obviously watching that yield curve as well, and flattening, hopefully not inverting. Larry and Dennis, thank you both very much. As always, folks, thank you for tuning in to Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.